Every time you search for an apartment, you're not just competing with other renters. You're fighting a ghost, a phantom bidder that knows exactly how much you'll pay before you do. And here's the twist that should make your skin crawl. You're teaching it. Every click, every search, every time you reluctantly agree to pay $50 more than you planned, you're feeding the machine that's learning to squeeze you tighter. This isn't a conspiracy theory. This is rent pricing software, and it's deciding what you pay to live. The landlord sitting across from you, apologizing about the increase, claiming their hands are tied. They're not lying. Their hands are tied, but not by market forces, by software they paid for. Software designed to do one thing: maximize the amount of money extracted from you each month. And if you think you can just move, just find another building, another neighborhood, here's the part that should terrify you. The same software is pricing that apartment too. In some cities, 70% of available units are priced by the same algorithm. You're not choosing between landlords anymore. You're choosing between different buildings owned by the same ghost. Let's go back, because this story doesn't start with computers. It starts with a man in a suit, standing in front of a newly built suburb in 1952, watching families move into identical houses and realizing something that would change everything. He realized that controlling supply was easy, but controlling demand, manipulating what people were willing to pay without them noticing, that was the real game. That was the future. His name isn't important. What matters is the idea he helped legitimize. The idea that housing isn't shelter, it's an asset class, and assets have one purpose: appreciation, growth, return on investment. The moment housing stopped being about living and started being about investing, the game was rigged, because investors don't care if you can afford rent. They care about yield. They care about quarterly reports. They care about showing their shareholders that the number went up. But here's where it gets interesting. For decades, they had a problem. Real estate was local, messy. A landlord in Cleveland couldn't easily know what a landlord in Phoenix was charging. Information was scattered. Pricing was guesswork. Landlords competed. And when landlords compete, renters win. Not by much, but enough to matter. Enough to keep the system from completely crushing people. Then came the internet. Then came big data. Then came the algorithm. Let me paint you a picture of how this works. Imagine you're a property management company. You own 4,000 units across a city. Every month, you have to decide what to charge for rent. The old way, you'd look at comparable buildings. You'd consider vacancy rates. If too many units sat empty, you'd lower prices. If you were full, you'd raise them. Basic supply and demand. The invisible hand of the market doing its thing. But that's money left on the table. Because you're guessing. You don't really know the maximum each tenant will pay. You don't know if the person in Unit 312 would actually stomach another $100 increase. You don't know if lowering rent by $50 would fill that vacant unit, or if you could keep it at the current price and wait for someone desperate enough to pay it. Enter the software. Companies with names that sound benign, helpful, RealPage, Yardi, Lease, Rent Options, Pricer. They promise to solve your problem. They promise to take the guesswork out of pricing. And they deliver, but not the way you think. The software doesn't just analyze your building. It analyzes every building. It hoovers up data from every property manager using the system. Rental rates, vacancy rates, lease renewal rates, how long units sit empty, how often tenants break leases, what amenities command premium pricing. It sees everything, and then it does something remarkable. It tells all the landlords to raise prices at the same time. Not explicitly. That would be illegal. Price fixing has been against the law since the Sherman Antitrust Act of 1890. But the software doesn't need to be explicit. It just makes recommendations. Strong recommendations. And here's the beautiful part. From the algorithm's perspective, the landlords follow them. 90% compliance in some markets because the software works. It increases revenue. And when every landlord in a city is using the same software, following the same recommendations, you don't have competition anymore. You have coordination without conspiracy. Collusion without conversation. Let me take you inside the mind of the algorithm, not the technical details, the philosophy, the logic. Traditional economic theory says that if you raise prices too high, you lose customers. In housing, that means vacancies. Empty units earn $0. So there's a natural ceiling, a point where greed defeats itself. But the algorithm discovered something, a loophole in human desperation. It learned that in cities with housing shortages, you can keep units empty. You can let them sit dark for months. Because maintaining high prices across the market is more profitable than filling every unit. Here's the math. Let's say you own 100 apartments. The old way, you'd rent all 100 at $2,000 each. That's $200,000 a month. But the algorithm runs a different calculation. What if you rent only 90 apartments at $2,300 each? That's $207,000. You make more money with 10% vacancy than you did at full occupancy. And, as a bonus, you create scarcity. You make it harder for renters to find places, which means the ones who do find apartments are more desperate, more willing to pay. This isn't theoretical. This is happening. Major property management companies have openly admitted to maintaining strategic vacancies. They call it revenue management. The same technique airlines use to price seats. The same technique hotels use for rooms. Except you can choose not to fly. You can choose not to stay in a hotel. You cannot choose not to have a home. The algorithm also learned timing. It learned that most leases expire in summer, that people move when the weather is good, when school is out. So it raises prices in June and July, when demand is highest and your options are lowest. It learned that renewal rates are higher than new tenant rates because moving is expensive and exhausting. So it increases renewal offers by 8 to 12% annually, knowing most people will pay rather than pack boxes and hire movers. And it learned segmentation. It learned that some tenants are price sensitive and some aren't. Young professionals will pay premium for location. Families will pay for space and school districts. It learned to identify which units can command luxury pricing and which need to stay affordable to maintain occupancy. But here's the key. The affordable units aren't priced to be affordable. They're priced at the maximum the most desperate tenant will bear. Now let's zoom out. Let's look at what this means at scale. In cities like Nashville, Seattle, and Atlanta, the software controls pricing for the majority of rental units, not just luxury high-rises, regular apartments, the kind working people live in. When 70% of available housing is priced by the same algorithm, you don't have a market anymore. You have a cartel that never meets, never talks, never agrees, but acts in perfect coordination. Lawsuits are starting. Attorneys general are investigating. Tenants are fighting back. And the companies deny everything. They say the software just provides information, recommendations, that landlords are free to ignore them, which is technically true, but misses the point entirely. When a landlord pays tens of thousands of dollars for pricing software, when that software promises to increase revenue by 5 to 10%, when 90% of users follow the recommendations, free choice becomes theoretical. This is the part where I need to take you back further, because the deeper story isn't about software. It's about a transformation that happened slowly over decades, so slowly most people didn't notice until it was too late. After World War II, America built housing like it was going out of style. Suburbs exploded. Developers competed. Prices stayed relatively stable because supply kept pace with demand. Home ownership rates climbed. Rent, for those who didn't buy, remained a reasonable percentage of income. 25 to 30% was the standard. Manageable. Then came the 1970s, stagflation, economic chaos, and a shift in thinking. Housing started being treated not as social infrastructure but as investment vehicle. Tax policies changed. Zoning laws calcified. NIMBYism took root. Not in my backyard. Neighborhoods that already had housing fought to prevent new construction, ostensibly for quality of life, really to protect property values. And here's where the trap closed. When existing homeowners vote to restrict new housing, they're not just being selfish, they're being rational. Their wealth is tied to their home value. If new apartments get built and supply increases, home values might stagnate or drop. So they fight development. They attend city council meetings. They cite traffic concerns, neighborhood character, environmental impact. Anything to stop construction. The result is predictable. Supply stagnates. Population grows. Demand outpaces supply. Prices rise, which makes housing an even better investment, which attracts more investors, which drives prices higher, which makes people more protective of their property values. It's a doom loop, and the algorithm arrived right at the moment when the loop was tightening. The software didn't create the housing crisis. The crisis created the software. Or more accurately, the crisis created the market conditions where the software could thrive, where coordination was profitable, where landlords were willing to keep units empty because demand was so intense that scarcity became a feature, not a bug. Think about what that means. We built a system where empty apartments are more valuable than housed human beings, where an algorithm can calculate that your desperation is worth more than your presence, where the most profitable strategy is to let homes sit dark while people sleep in cars. This is financial engineering applied to human need. It's the same mindset that created the mortgage-backed securities that imploded in 2008. The same mindset that treats food as commodity futures while people starve. The same logic that says everything, including the roof over your head, is just another asset to be optimized for return. And here's what makes it so insidious. The people running the software companies aren't cartoon villains. They're not sitting in boardrooms cackling about human suffering. They're optimization specialists, data scientists. They see numbers, not neighbors. They see revenue curves, not families choosing between rent and groceries. The algorithm has no malice. It has no emotion at all. It just has a goal: maximize revenue. And it pursues that goal with perfect, inhuman efficiency. The landlords aren't monsters either. Most of them. They're just trying to maximize return on their investment. The software tells them they're leaving money on the table, shows them projections, proves that other properties using the system see revenue increases. What are they supposed to do? Leave profit unclaimed while their competitors don't? This is how systems of exploitation work in the modern world. Nobody feels responsible because everybody is just responding rationally to incentives. The software company is just selling a product. The landlord is just maximizing investment returns. The property management company is just doing its fiduciary duty to shareholders. And you're just a data point, a unit of demand, a number in a spreadsheet optimizing itself. Let's talk about what this does to you. Not financially, psychologically. You start apartment hunting. You set a budget. Let's say $1,500 a month. That's what you can afford while still saving a little, still having a life. You search. Everything in your range is either too far from work, too small, or in neighborhoods you don't feel safe in. So you expand your budget. $1,600, $1,700. You find something decent at $1,800. It's more than you wanted to pay, but it's nice enough. You apply. While you're waiting to hear back, you keep looking, just in case, and you notice something. The apartment you applied for? It's now listed at $1,900. It went up overnight. You check other listings. Same thing. Prices shifting day to day, sometimes hour to hour, like airline tickets, like surge pricing for ride shares. Your housing cost is being dynamically optimized based on demand patterns you can't see and algorithms you don't understand. You get approved. You sign the lease at 1800. You move in. A year passes. You get your renewal notice. 20% increase. You call the leasing office. They're apologetic. They explain that market rates have gone up, that they're actually offering you a discount compared to what new tenants pay. You look around at other buildings. Everything is equally expensive or worse. You sign the renewal. What choice do you have? This is the splinter I mentioned. The feeling that something is fundamentally wrong. You're working the same job, making roughly the same money, maybe a little more, but housing eats more of your income every year. You're running faster to stay in place, and slowly, imperceptibly, your life contracts. You eat out less. You cancel subscriptions. You stop saving. You push off the dentist. You don't take vacations. Your entire financial life reorganizes itself around the rent. And you look around and everyone is going through the same thing. Your coworkers, your friends. Everyone is stretched thin. Everyone is one emergency away from disaster. But the economy is supposedly good. Unemployment is low. Stock market is up. The numbers say everything is fine. Except the numbers don't measure your lived reality. They don't measure the anxiety, the constant calculation, the feeling that you're being slowly crushed by forces you can't name and can't fight. The algorithm knows this about you. It knows you'll pay because the alternative is worse. Homelessness, moving back with parents, leaving the city, leaving your job, your community, your life. The algorithm has quantified your desperation, and it prices accordingly. Now we arrive at the question that matters. What do you do about this? The easy answer is regulation, antitrust enforcement, ban the software, make price fixing illegal even when it's mediated by algorithms. And those things should happen, are starting to happen. But they're slow. The legal system moves at the speed of glaciers while rent increases monthly. And even if you win, even if you ban this specific software, another will emerge, more subtle, better at hiding coordination. The incentives haven't changed, only the tools. The real answer is harder, more radical. It requires looking at the entire system and asking why housing became an investment vehicle in the first place. Some countries treat housing differently. In Vienna, 60% of residents live in social housing, government-built, maintained, priced based on cost, not market rates. It's not charity. It's not Soviet-style concrete blocks. It's high-quality housing treated as public infrastructure, like roads, like water, like schools. And because so much housing is outside the speculative market, private landlords can't price gouge. They have to compete with the public option. In Singapore, 80% of residents live in government-built flats. They can buy them, build equity, but the government maintains control over resale prices. Housing appreciates slowly, modestly, enough to build wealth but not enough to create a speculative frenzy. It's boring, stable, and people can afford to live. These aren't perfect systems. They have trade-offs, but they demonstrate that the American model, the model where housing is primarily an investment asset, isn't inevitable. It's a choice. A choice made over decades through policy decisions that prioritized property values over affordability, that treated homes as retirement accounts, that let investors, foreign and domestic, buy up housing stock and extract maximum rent. Changing that requires political will we don't currently have. It requires accepting that home values might not endlessly appreciate, that investments carry risk, that housing people is more important than housing capital. These are not popular ideas among people who vote, people who own property, people who have built their financial futures on rising real estate values. So we're stuck, renters crushed by algorithms, homeowners terrified of anything that might lower values, investors circling, politicians afraid to touch the third rail of property rights. And the software keeps learning, keeps optimizing, keeps finding new ways to extract maximum revenue from the basic human need for shelter. But here's what you can do, personally, right now. You can stop treating this as normal. You can stop accepting the logic that says your home should cost more every year for no reason other than increased demand. You can organize with other tenants. You can show up to city council meetings and fight for new construction, dense construction, affordable construction. You can vote for politicians who treat housing as a right, not just a market. You can also make harder choices. Maybe the city you're in isn't sustainable anymore. Maybe it's time to leave. I know that sounds defeatist, like giving up, but there's a difference between strategic retreat and surrender. Some cities have been captured so completely by speculative capital that fighting as an individual renter is like punching a hurricane. Your energy might be better spent building a life somewhere the algorithm hasn't fully colonized yet. Or you can stay and find ways to opt out of the traditional rental market. Co-housing, land trusts, community ownership models. They're not easy, they're not common, but they exist. And they represent housing as it could be, should be, a shared resource managed for the benefit of the people who live there, not distant investors watching numbers on spreadsheets. The algorithm wants you to feel powerless, wants you to accept that this is just how things are now. Market forces, supply and demand, the invisible hand. But markets aren't natural phenomena. They're human constructions, with human rules, made by humans for human purposes, and humans can change them. The software pricing your rent operates on the assumption that housing is primarily an investment, that maximizing revenue is the highest good, that your ability to pay is the only factor that matters. But that's not a law of nature. It's a choice, a system we built, and we can build a different one. Every time you see an empty apartment building with a waiting list, remember, that's not a market failure. That's the market working exactly as designed to optimize for profit, not people. And the first step in changing that is seeing it clearly, understanding that the broken feeling isn't your fault. You're not bad with money. You're not lazy. You're not failing. You're fighting a rigged game, and the house always wins unless you change the rules. The ghost I mentioned at the beginning, the phantom bidder that knows how much you'll pay. It's not actually a ghost. It's math. It's code. It's human decisions wrapped in algorithmic certainty. And humans can be fought. Code can be rewritten. Math can be regulated. But first, you have to see it. First, you have to stop believing that invisible hands are guiding prices toward fairness. First, you have to recognize that when software sets your rent, when algorithms decide what you pay to exist, you're not in a market, you're in a machine, and machines serve whoever designed them. The question is whether you'll keep feeding it, keep teaching it to squeeze you tighter, or whether you'll find the kill switch, whether you'll build something different. Something that treats housing as what it actually is, not an asset, not an investment vehicle, not a data point in a revenue optimization model, but a home, a place to live, a foundation for building a life. The algorithm can't price that, can't quantify it, can't optimize it, because it's not for sale. And maybe that's where we start, by remembering that some things shouldn't be,